Besant says Trump wants lower 10-year yields and not Fed cuts. I'd love to hear what you guys have to say about this. Let's start with John.
Yeah, so I think there was one particular quote a couple quotes that I think are emblematic of where Besant's head is at. One was he said he's referring to Trump. He wants lower rates. He is not calling for the Fed to lower rates, Besant said. Trump believes that if we deregulate the economy, if we get this tax bill done, if we get energy down, then rates will take care of themselves and the dollar will take care of itself. Just a little bit more. We cut the spending, we cut the size of government, we get more efficiency in the government. We're going to get into a good interest rate cycle. So I think that's interesting for a few reasons. One is because in the first term, Trump was pretty vocal. I believe, if my memory is correct, he's just outright tweeting Jerome Powell should reduce interest rates now in all caps and an exclamation point. It doesn't seem like he's going to be doing that this time. It seems like the fiscal side is going to take more of the wheel here. And that's what Besant seems to be saying now. But again, I would just think about Trump's incentives here. This is someone who wants to see more investment in the United States. He is a career real estate developer and investor. He wants to see the stock market be higher on a longer term time horizon, not on any given 7-day period. And generally speaking, when the 10 years coming down, that makes all of those things a lot easier to accomplish.
Yeah. It's going to your first point, which I think is really the interesting angle here. It's a bit of a power reposition from the Fed to the fiscal authority. And there's some people that have said the Fed's dead. The Fed has been dead for a while. They've had vanishingly little control. And one way to look at this is you could see that like Besant and Trump got in there and they realized, you know what, the Fed really isn't going to manage this for us. It doesn't really matter. And so we're just going to take the monetary reins and we're going to manage it through statecraft and through energy policy. We're going to unleash energy to bring down the short-term interest rates and bring down the dollar. And we're going to do the stablecoins bill, and we're going to do these kind of other tactics to bring down the 10-year. And it's an interesting, it looks like what they're after is DXY down, the dollar cheaper, and the 10-year down. And if they can pull that off, that's a holy grail for them. And it's good for Bitcoin. It's good for risk assets. It's good for America. It's good for reshoring industrial jobs and manufacturing. In my head, more power to them. I think I would love to see DXY $15 lower. And I would love to see the 10-year at half of what it is.
Explain what the DXY is.
So dollar index. So just like the strength of the dollar relative to other currencies. And this is one of the big problems we have as a nation. Triffin's dilemma is that when the dollar trades so much stronger, which it does, than all other currencies, it is completely ineffective for us to export goods. We can't really sell goods to other countries because them converting from their currency to our currency, it's like a tariff. It's like a huge tariff that's in place. Like the function of the dollar as is effectively works that way. They're just different ways of taxing trade between countries.
There's a really good graphic on this. I just sent it in our chat, Brady. I don't know if that's too annoying to bring up, but I can talk through it either way. Charlie Bolello, if you guys are familiar with him, he puts out some really good graphics on markets, and it shows the 10-year, it's basically fiat performance of the dollar relative to other fiat currencies out there. And he posted it last January, but the point still stands. Like the dollar has outperformed basically every single fiat currency except the Swiss franc on a 10-year time frame. And that you might ask yourself, why do so many entities around the world hold dollars? And the answer is because of that persistent dollar overvaluation. Like here it is. Perfect. All of that red, that is other fiat currencies losing significant value against the dollar over 10 years. This is why if you're going to hold one of these other currencies, you're going to end up losing a ton of value over 10 years. So you end up holding the dollar or treasuries that is a dollar plus it pays you some yield. Maybe this is a good segue to talk about this guy, Stephen Moran, who's Trump's chairman of the Council of Economic Advisors. He put out a paper that's literally titled, you were quick, Brady, nicely done, A User's Guide to Restructuring the Global Trading System. It's a 41-page paper where
Yeah.
he's basically outlined, like, this is huge. This, I haven't read through the whole thing yet. I'm still getting through it, but if anyone wants weekend reading, would highly recommend this. And I'm not saying just because he wrote this paper means he's going to do it. On the flip side, we have to remember that people like Trump and others have been talking about bringing back US manufacturing jobs and all the problems with imbalanced trade. Like, people have been talking about this for a long time and things have not necessarily been done about it. But maybe this is the 4-year period where they're going to make some changes to the monetary system and the global trading system that they have been talking about for a long time. So he specifically talks of, you could see in that second section, the root of the economic imbalances lies in persistent dollar overvaluation. And that's exactly the chart that we just showed you guys, that the dollar basically outperforms every other fiat currency.
There's a lot of this going on. It reminds me also of Matthew Pine's report for Scott Besson. There's this phrase that keeps getting thrown around. It's restructuring global trade, reordering global trade. What does it mean? And that's what you're seeing out of the Trump administration is they're looking at the balance of global trade, the currency dynamics, the way the US has agreements and services that we provide for other countries. And all of these things are suddenly back on the table. I really think you're seeing some players in the White House that are just seeing, and the administration, what they can do. They're pulling levers. Which levers work? Does this lever work? Does it, or is it rusted? Is it ineffective? Can I do this? Can I do that? And I think like the underlying view here is, what ability do we have to restructure these relationships? And I think there's a lot that's being tried. Tariffs are being thrown around. Are they real? Are they negotiating tactics? Are we getting rid of income tax? Are we not getting rid of income tax? Can we get more of our revenue from foreign trading partners? Can we lower domestic costs? Like, we're going to see, like, these, can we lower spending? Can we cut spending? Is there a bunch of waste? What waste can we find? It's very much just looking at all the options and seeing what's possible. And I think over the next 6 months, it'll become more concrete and we'll see, is it feasible? Is it not feasible? Are we able to restructure these trading relationships? I think the answer will be yes, to a large degree. It doesn't mean everything that everyone wants to accomplish will be accomplished. It doesn't mean that everything will be good even. But I do think that directionally it is correct that there are a lot of agreements in place and there's a lot of systems in place that effectively tax the US and export the proceeds to the rest. That's Triffin's dilemma in a nutshell. And I think it's not just Triffin's dilemma on the currency system. There's many other ways that this takes place. And I think, I'm not saying that that right number should be zero. It's probably a decent thing that the US, as the richest and most powerful country, makes sure people don't starve sometimes, or like steps in for some disaster relief in Haiti or those sort of things. I'm not saying that number should be zero and there should be nothing that we're doing for the world. But I think it's also the case that I think a lot of these things are structurally misaligned. And it'll be interesting to see how this plays out.
How do you guys think that this initiative by Trump to reduce fiscal spending, like, how successful can he be at that? Lynn Alden always talks about nothing stops this train. Something like 70% of the federal budget is just, you can't cut it. It's Medicare, Medicaid, it's military and defense spending. And these are like the top 3 or 4. And then, of course, interest payments is a huge part of federal spending, the budget. Is there enough like actual cuttable fat to significantly reduce fiscal spending to the point that it will have some kind of real impact in combination with some of these other strategies?
It's an interesting question, right? Because no, there's not. Like, unless you had some miracle, you can't reduce it enough to get out of the problem we're in, right? There's too much Social Security, Medicare, military. These are massive obligations. Even if you cut all the fat, even if you raised 10% universal tariffs, like, you're still not getting out of that debt.
It's just, the train is just running so fast at this point. And it's really the interest payments that are ballooning so much that are moving up as the top expense categories for the US budget.
However, that being said, that doesn't mean there isn't virtue in trying to make it better, right? It doesn't mean that the right response is like, if we can't like ultimately stop the unwind of this monetary system, then we should just like throw our hands up. You know what I mean?
I agree with that.
Yeah, and there may be a real world where they're able, between lowering rates on the long end, cutting spending, and raising additional revenues, they could reduce the speed that deficit is growing by a material amount. Like, that is also possible. They won't stop it, they won't prevent this dynamic, but they could really slow it down.
And there's something to be said about just a mind shift change
Yes.
about how we approach government. Even if it's not incredibly materially successful in reducing deficits, just trying does make a difference.
Like, you look at what some of the big players have said, Besson and others. There's not a direct quote, but what I've seen them say is, we're spending 7% on a 7% is the deficit as a percentage of GDP right now. We're not in a recession based on how they calculate recession. So that's a big deficit that we have right now. A lot of them, when they talk about cutting it, they're like, yeah, we want to get it back down to the 3% range. But that's still a deficit. By definition, like, you're still adding to the debt. They're basically talking about adding to the debt more slowly. It's like the joke about inflation. They're like, we want inflation to come down. Oh, you mean prices actually going back to where they were? They're like, whoa, whoa, no, not that. We just want it to increase more slowly. So that's, I think, what's being talked about. I don't think there's anyone in a position of power that's really predicting that they're going to balance the budget and start having surpluses anytime soon.
It's not going to happen, but I think being responsible stewards, and it's also, here's the thing, as you're making these moves, you can also start planning for the next system. The event horizon that's being talked about here is a restructuring of the monetary system. It's not that the US dies and disappears, it's that the actual currency and debt system goes through some sort of restructuring, which has happened many times in the past. It happened at the end of World War II. It happened with Nixon, right? It's not the end, it's the start of something new. And so as you're managing this, you can also start planting the seeds for the next monetary order. And that's maybe some of what, it's an interesting angle you could argue, is this sovereign wealth fund discussion that has been floated around. Maybe it's a stretch and maybe they're not planning in that way. But one argument you could make for it is that it puts the US in a better position for the inevitable long-term end of the current dollar system.